So there's not going to be a trade war with the US or any of the partners. However, how does that reconcile now the fact that Trump has said there's going to be tariffs for the whole of his administration? That's not true. What he means is quite simple, is that there are tariffs now as a tactical ploy in order to get countries to negotiate. But look at Vietnam, look at Israel, look at Argentina. All of them are now going to negotiations to get zero tariffs and a trade deal done with Donald Trump and the Trump administration in the US. So what's likely to happen is that over the next 60 days, there's more than likely to be a lot of tension and a lot of negotiations. But I reckon by the end of 60 days, maybe 90 days, you will get a deal, you get a trade agreement done. Why is that? Quite simple. Because no country wants to be restricted on trade. What we want is free trade. We want free trade on a balanced playing field. And that's what's been missing over the years. Remember, other countries have been charging the US tariffs for over 40 years. The Japanese, the Chinese, the Europeans, Australians, Canadians, Mexicans, South Americans, Africa, wherever the US exported its goods, then those goods were charged on the local country tariff measure platform. And what essentially Trump wants to do is level the playing field. There's not going to be a trade war. Financial markets have been whacked, but however, financial markets were overpriced already for some time. And I was saying last year, specifically in the first quarter, second quarter of 2025, there will be a fall in financial markets. That's exactly what happened. There's also likely to be a recession, probably a light one, or just skirmishing out of it and maybe be able to maneuver out of the recession, simply because as oil comes down, which is now down over 15% in the last week alone, that's going to feed into inflation. Yields on 10-year US Treasuries have gone down to 3.88% or lower. And as a result of that, borrowing costs across the board are now lower. So now that gives leeway to the Fed to lower interest rates. Lower interest rates, you're going to have more people having more money to spend. Why? Because they're not going to be paying interest on their car loans, mortgages, and all other types of business loans. So we are going to go through a tough period and then come out of it with a booming economy and a booming stock market. So I expect a bull market to take off in the third quarter of this year. If you want to join the webinar on the 4th of May, comment webinar to get on board. Catch you later.